Looking at a schematic here, another offshore financial structure. As we can see, Cook Islands at the top, one of my favourite places for the trust. There's reasons for that. You can go ahead and search online on why that is. But essentially, this is representing a wealth and asset protection strategy using a combination of trusts, foundations, LLCs, and potentially some other legal entities if they were needed. Okay, so the key entities of this, you might be wondering what a grantor of a trust is. Okay, so this actually owns 0.5% or is receiving, let's say, 2% of the profits from this entity here, which is Cayman Islands Holdings. Okay, so the individual creates the trust and funds a trust. They are likely the original owner of the assets that will be placed under protection. Okay, so this person here. So a legal trust is kind of designed to shield assets from those creditors or lawsuits. It holds 95% of the limited partnership, which obviously here is the Cayman Islands in interest of the LLC. Okay, so very, very simple. Okay, it's a central LLC, but it's basically acting as a holding company. So they are receiving royalties from a Nevis Foundation, potentially from a UK foundation, but that's just there to actually, we'll go into that shortly, and the Irish LLC, which then owns other businesses, potentially with other people involved. And again, there's also a Guernsey trust for the grandchildren. So a trust is established for future generations, okay? This is the Guernsey trust here. This is for the grandchildren. And it's a general partnership, and a 3.5% of the Cayman Islands holdings is always going into it, funding that trust for the actual grandchildren. Okay, so it's very simple. So the trust trustees determine liquidation or distribution rights, often in coordination with asset protection trust. Okay, so back to the Cayman Islands holdings. This is a core holding company. It consolidates assets and investments. Ownership is distributed across the above trusts, okay, which is 1, 2, and 3. Very simple stuff now. So the entities owned by the actual Cayman Islands holdings are, as you can see below, the UK LLC, the Nevis Foundation, and the Irish LLC, okay. So the UK company, as you can see in the small text down here, if I just zoom in, it owns mortgages owed by third parties, okay? And this is also potentially generating passive income for the Cayman Islands holdings, and therefore for the grandchildren, for the main trust, and XYZ, okay? Down below here is a Nevis Foundation. And this has direct investments into hedge funds. So the funds from the Cayman Islands holdings, let's say it makes money from Ireland, goes into the Cayman Islands holdings, and then it goes back down into the Nevis Foundation, which then has funds into the a hedge fund of your particular choice. Again, funds can then be withdrawn and go back up to the trust. So very key. Now we're focused on this one here. So if we move out of this and then go to the Irish LLC, this actually acts as another holding entity. It has a 26% stake, for example, in a UK business, which has been a venture into the business. And as you can see, 74% is owned by other persons. So it's really, really simple when you can actually see stuff like this, how it's laid out. You can see this is a very simple setup. Yes, there's some costs involved. Yes, you have to obviously pay for the Cook Islands Trust, the Guernsey Trust, the Irish LLC, the UK LLC, which is obviously paid for by itself, the Nevis Foundation, which is paid for by itself, the UK LLC, which is paid for by itself. So you can actually see it's not even expensive. It's completely free. And it has, many different aspects of it. This one is orientated around asset protection. Okay. So it's safeguarded its assets from lawsuits, creditors, or excessive taxation. So it also provides a generational wealth transfer the actual Guernsey trusts ensures assets are preserved and transferred to grandchildren with minimal estate taxes using the LLCs here, such as the Cayman Island Holdings Company. It's very favourable in those actual taxes. Now, regarding the actual holding company as well, it allows the trust to hold assets indirectly, providing a flexibility in management of the distribution, so you're not fixed into too many things. Regarding how the trust is set up, that is obviously determined by that, but it's very flexible. You can add on to this. It's very easy to do because the Cayman Islands holding company just then owns another holding company such as Ireland, or you can then create another segment here. Maybe you open up a new business over here, so some marketing company. You can go down here. The marketing company then invests into marketing companies. Then you have all of the structures coming off that. So you can really be flexible with this structure. It's a bit of a different one compared to other ones that you've actually seen on my channel, but it's very similar, you know. And you see my Cayman Islands again and again and again. It's very popular, especially in these types of situations where you are looking to minimize those taxes and to prove that asset protection within a trust. You know, it's very, very good. So it's often used by high net worth individuals, you know, mainly business owners, and it basically safeguards your wealth and ensures generational planning. Obviously, you can swap this for British Virgin Islands. You can change this maybe to a UK, Switzerland, Jersey, Hong Kong, Cayman Islands. You can change this. You know, this is just a prime example. Again, it's not legal advice. And down here again, you could even have another Cook Islands. You could have this. It's very flexible. You know, this is just really an example of what I see commonly within offshore structures, obviously as a corporate service provider. So there we go, guys. Very simple one. Hopefully you understood. Please drop any comments below. You don't have to like it. You don't have to subscribe. I'm not really too fussed, to be honest. For those of you interested, the algorithm would have given you this video, and therefore you've now received this knowledge. Any questions, drop me an email, drop me a question, you know. You can contact me on LinkedIn or Twitter or something. You know, I try to actively post, but I'm not always on there. LinkedIn, I'm a little bit more active than other social medias. And I'm probably looking at going to be uploading another 20 to 30 videos, see how they do, and then I will probably leave the YouTube channel there. Maybe let's see how it does. Let's see if it's worth my time on providing this value, and I will continue to provide this value to you. So over and out, guys, I'll see you in the next video. We'll probably look at some individual company metrics. We'll go into Belize, we'll go into Ireland, we'll go into the Cayman Islands, we'll go into British Virgin Islands. You know, we will have a look in depth eventually, kind of throughout this channel, over a number of different videos. So then you can actually learn the ins and outs of the differences between all of these companies, all of these countries, and having a corporation there. You can learn the differences there. The same with holding companies, you know. Might be better to have a holding company in Ireland and Cayman Islands. You know, it can be incredibly beneficial. It depends how a structure is done. It's very unique to every single person. So please keep that in mind. And again, regulation around this is getting hotter and hotter as the years kind of go by. As we move into a digitalized world, it's becoming harder and harder, especially in banking. I've been receiving so many banking applications, you know, it's becoming harder and harder. So let's really focus on getting something done for you in the future. If you are a business owner, it's probably key. And if you do have grandchildren, if you do have children, you can potentially look at a setup like this.